Welcome to Commodities, and here we're looking at gold on the daily chart, and the 61.8 retracement level is up in this area here, which is taking this in consideration from this high here to this low here. If we took this particular leg either from here or from here, then the 61.8 comes in around this little area through here. So look, there's lots of resistance up in this area here. There's no doubt about that. First of all, there's this area here. Secondly, the closest largest number, which is the 1300, which is obviously a target point. And then there's group 2, which is 12, 65, 72 and 80. So we're above the 72 here. We could come back to the 1272. But the 1280 would be the next number there. But I also know the 1285, the 1290, even 1295, they've all got certain points that, this particular top here, this move up here that, can top out too. So first of all, there's plenty of supply within this, this triangle sort of pattern through here, and that's where it's approaching. You can see the daily stochastics oscillator here. It's done its run here, and it's in its later stages here. So there is resistance, there, and ending wave structures as well. Now, we're looking at 2 counts coming up into this particular direction through here. There's the one on our website, which you can look at, and secondly, there is this particular one here where it just takes the wave count a little bit higher through here. The resistance from this line through here would be valid, as would this one here. This is why I've left them here, and I probably mentioned this once before. I think it's that when something comes out of a triangle here, the apex here is always a good sort of area where it can finish its trend into, but leaving those trend lines in place is also a strong thing as well. So we'll just leave them there for the time being. But the reason for this one here, further on the intraday, it cuts through onto the sort of 1285 sort of area here. So we are working with this little alternative count here, which can take the market higher. I'll just go into a bit more detail on this particular chart here, which is this one here. So this is a little bit different, this count here, and it's just simply putting the low here at wave 5 low here, and looking at this as 1 and 2 and 3 and 4 and 5 here for 1, an A and a B and a C here. But this is debatable, all of this here, because this little, calling this wave 2 here is fine. It's just this is just not. This is in it should be in 5 waves here, really, because it should be an A and a B, and this B looks all right, and the C wave here doesn't look like it's in 5, but it's not a bad fit. And then this one here would go 1, 2, 3, 4, and 5 to here for wave 1, back for wave 2, strong wave here for 3. So we're looking for 3 here, 4 here, and 5 up here. So in the other count that we've got, this would actually be the top here, coming in at 1285. However, let's just see how it pans out, but either way, what we should see is resistance up in this area here, and some type of corrective move back into group 2 here, 65, 72 and the 80. Wave 4 normally breaks the trend line or trend channel that it's in, so expect that. That's what you're looking for. It's not a panic button or anything. But popping its head above the 280 into the 285, 290 sort of area here, and then folding back and retesting the demand, so to speak. And we'll watch how quickly that oscillator moves back down. Look, whichever way we look at it, we're looking at a top in this area here, a move back, and then a move up as well. And like I mentioned, there's lots of supply areas in this zone here. It's because of these, so much volume was turned over here, and people will be taking commercials and whatnot, will be taking action, on those positions. The silver market is still to the upside as well, pretty much the same count as gold. the closest largest number is the 2000 there. However, expect a correction through group 2 here, which is 65, 72 and the 80 through here. Yeah, and it counts reasonably well to the upside, but it's got no signs of actually turning just yet. But once again, the daily oscillator is into the overbought area, so they're expected here. So it's not a bad idea to take any profits into the 72 and also the 80 here as well. Still on Friday, you would want to be closing out your positions anyway on these type of things. The copper market, I've changed the count a little bit. It's we've got wave 3 coming down through here. That's fine. That's all good. And then we had this A, B, and C here, which we labelled as wave 4. This wave 4 over here. And then we were looking for 5 waves down through to here, and we've got our 1 and 2, and looking for our 3rd and 4th and 5th down. But this has moved up through here into the price territory of wave 1 coming down. So I'm just taking a bit of a guess here and assuming that the move down through here is a wave B, and we still have wave C to go up here. So basically a larger A, B, and C for wave 4 here. And that's the thing with wave 4s. They, after a strong move down in a 3rd wave, they take time to to basically get over it, readjust, rebalance, and all the rest of it, and then get back on track with the trend, which will be wave 5 moving down here. So, I normally look at the pivot within group 1 here, which is 1, 2, and 3 here. When the number 2 here becomes the retested resistance, it's not enough to move through it. That's part of the process, but it's the retest that's more important because that's the confirming part of it. If that becomes the resistance, then I know that we'll be heading down from that point. And we could still have this as 5 waves coming down in terms of the 1, the 2, well, an A and a B and a C back to here. So this can still be the 3rd wave and the 4th wave here, but we do have overlapping wave structures, but we'll take that on board. But I can see that this move here is likely to be corrective here. Anyway, let's just see how it goes. But look, support on top of group 1, 303, we'll set the target at 305. So that's what we're looking for here. So look, not a lot of change here. It's just that, we've just got to work through this particular pattern through here. The oil market, a couple of things here. This particular move through here is a little bit like this whole move through here. It's kind of, this one here is in 3 waves and this one here is in 3 waves. Now, I've got 2 counts here just to make it sort of complicated as well. The first count is we're looking at 5 waves from wave E here, and we're looking at 1, 2, 3, 4, and 5, which is looking at the top of the 3rd wave, roughly into the 108 here, a bit lower. 8's a profit-taking number, first even number before the next whole number, and then also before the 108, we've got 10772. So the 772 is always a target to exit trades on as well. So the other count that I've got is actually having a bit of a top here actually, and it's counting 5 waves all the way up through here. I know that it doesn't look like a 5-wave structure here, but in an odd way it does count like that. So if I just come back, sort of, don't have it on this particular chart here. This is the original count here, but let's just go here, the alternative count. This is what we use the morning, I don't mean to confuse things, but this is what we use the morning session for, is to, to look at all the possibilities. So, looking at this low down through here, and this is not a very good looking wave count, I grant you that, but 1, 2, and then 1, 2, 3, 4, 5 up through to here, back for 4 here, and then up for 5 here in terms of 1, 2, 3, 4, and 5 here. So it is possible that we do have a a top in play here as such. And if that's the case, we'd see a larger move back into the 105. If that's not the case, then we'll see a move back into the 106 area and then move up from there. So just drilling in here a little bit, we can see a couple of things here. We can see the market, well, this is close to 107.72 up here into group 2, anyway, 108. So we expect profit taking to come in at those areas there. And secondly, we could see that this is a correction across the 107, and that's fine, as there was a correction across the 106 here. But on a more subtle note here, this 106.50 here, as I mentioned before, that will come into play a lot, is actually, I feel, is the balance line for this whole sort of toppy area through here. So normally the distance above can be the distance below it can travel. So it's got the arrival here, the reaction, the first high above the level, and then the correction unfolding through here. So obviously, if the 106.50 here support fails, then obviously it will drop down to the 106. If it drops down to the 106, then we've got to bring in 105.50 area through here as well. So, and the reason that I feel that it can drop down here further is just simply from this little pattern just here. It's in 3 waves, so that means that this low here can be taken out. And if we investigate that, I'll come back to this chart here. I'll come back to the other chart in a moment, but this is it here. So this little pattern here is a really nice A, B, and C wave here in 5 waves. So this low here can be taken out. If I'm wrong, then the place to trade from, of course, is 107 as support, as tested support. So you would want to see, you'd want to see this would be the sort of move here. It'd be above there, then it'll come back and test it. It's got to sit on it, and then you've got your reference points, and you can move in from that. So that's what you're looking for on the long side, or even this reference point here could be used. Otherwise, if that's not the case, then we can expect this market to take this lower and move back into this area here, and then we'll examine exactly what we've got here in terms of patterns. I mean, currently we've got this as an A and a B and a C wave here, and that's fine, but the problem is we've got this little ABC here, which gives us the downside here. I even think that this little move here can be part of this whole structure here that's not completed. It's kind of like a 3rd wave, 4th wave, and 5th wave that never made a new high here, a truncated 5th wave. And then this is the first leg down in the correction, like the A wave, the B wave, and then the C wave. And the C wave would pan out in terms of 1, 2, 3, 4, and 5, like here before finding a low, then moving up from that point there. So any long trade should have been covered into failure back into this area through here if you had an understanding of 107.72 in group 2 here. The gas market is, it's just simply going to struggle at these old highs here, isn't it? That's the thing. This little move from 450 back up to, 477 area here has not been corrected, and it's at an old high. So we can expect some type of an A and a B and a C wave here within group 2, and group 2 is 465, 472, and the 480. So we'll see that play out in here. It hasn't played out so far. Well, it has started obviously, but it's not there just yet here. So it's all good though. We've got an impulse wave here. It's just how large this correction is going to be. So where you'll start off with the 50-60% retracement level. So it can come back to this particular area through here. There's no doubt about that. But I think that it'll stay in group 2 and may even stay where it is here. So if you're long, that's fine. If you're not, then just hold off a little bit, and we can look at it a little bit later. This is the correctional pattern here. This little space in here sort of suggests that there will be another little leg down through here, and probably follow the oil down early in the week as well. The grains, soybeans, wheat, corn, coffee, sugar, and the orange juice, not a grain, but we may have we know that with most of the grains we're looking for lows. It's possible to have lows in place, maybe not so much with the soybean market here, but maybe so as well, because you know, in this area through here, I've been looking at a 5-wave structure to the downside here, okay? In 5 waves, looking at the green 1, green 2, and green 3 here, and we're looking for 5 waves in here. And we're looking yesterday at a possible low in through here, or, you know, coming down further. But if the low's in place here, then we can look for a 38.2 retracement level of wave 3 here, which will take us back to 1450 area through there, okay? But if we've got 1450 as support there, then we'll definitely be going long on top of that, okay? Let's just drill in here a little bit. So yesterday primary count was 1, 2, 3, 4, and 5 here, and then we'll, you know, calling that a low in here. There was a secondary count that we had here where we thought, and still may be, that this here is not completed as such. So we were looking at this down for 1 and back for 2 would be fine. And then we're looking at a larger 3rd wave down here and calling this 1, 2, 3, 4, and 5 to here just for the 3rd, then the 4th, then the 5th. So that's quite possible as well. But what we're seeing in soybeans and corn and coffee and sugar, we're seeing a bit of a bounce up, or actually not so much in wheat, and still see this finding its low into the 580 area here. So there's no real change in this one here, so sorry about that. Going into the corn area here, mainly the corn and the coffee and the sugar rather, but we're seeing a little impulse wave up through here. So this is like a little 5-wave structure, and this is the first inkling of a low being in place. We know that that the weekly stochastics are moving into the over sold area, so they can bounce back at this point here. One of the things we've had here in this 5th wave here, trying to count this down through to here from the 4th wave here, we're looking for 1, 2, 3, 4, and 5. Not a very good looking 5-wave structure at all. In fact, this wave 3 here is really the smallest in the lot, which is not the go either. But look, I know that we're looking for a low here. If we find support on the 450 here, then we may look at gleaning a first position on the long side here. Yes, you could do it from here as such, but this is the 5-minute chart here, and it's possible that, you know, this is we don't have any overlapping wave structures in here, so this is why we're calling it impulsive, but there's just not clear enough price action to call it in. So that's why we're going to wait for further development and look for nice support on the 450 here, because this is the halfway mark between 400 and 500, and support on top of the 450 here really adds a lot of weight. And yeah, so the coffee market here, once again, this is the same really with most of the grains, is that you know, we're looking at these weekly stochastics basically coming into the buying zone here. So this particular market through here, we know we got 5 waves up here. The move down through here, it counts best as 5 waves. So if it is 5 waves down here, that means we'll have an A and a B and a C wave here, and then we'll move up. But, you know, I could be wrong, and we could have the ABC correction in here, and we could just move straight up from here. So we really need to be a little bit mindful. So, you know, we're looking for supports on 172 and 180 here. And, you know, if we can glean some positions in here, yes, we could hold, we'll you know, let's just go in and have a little look at this anyway. This is the 5-wave count that I've got to the downside here, and look, it's not a very nice, clean structure in any way. That's why I'm taking it with a pinch of salt, but it's the best fit that I've got so far. So if that's the case, we'll see a wave B back up into this area through here, and in our last little 5 waves down through here, the 1, 2, 3, 4, and 5. So we're looking for, you know, a push up through here, and we're looking for support on 172 here. So if you've got longs here, that's fine. You we only want to buy really small, the smallest possible amount, depending on your account size, because we just really want to try and build some up here. So we knew that yesterday that would be moving, above here, as such. So look, we've actually got 3 waves up here in a sense, so it makes it a little bit sort of corrective in a sense, and it can fail and roll over from here. So we need to be mindful of that. So the 170 as resistance would not be a good look for this particular market. But, if we can sort of hold above here and we, say we get a support on the 173, 175, nice support on the 175 here, you could glean a small position there, because then that would throw the weight to the upside as well. But basically getting a position, say on 175 and 180 here, would just single contracts even, that would help us, build a position further up here. But we don't have this clean 5 waves yet from here. We don't have 1, 2, 3, 4, and 5. That's the problem, and that's what we're looking for. We're looking for that. We don't have that. We've only got it up to about here so far. That's the risk. But if you want to play a safer game, then wait for the 180 to become the support area here. The sugar market's the same as well. We've got our bounce off the close to the medium level through here, and once again the weekly stochastics are sort of moving into the buying zone here. This particular move down through here is corrective, so expect a high above here. This basically this leg here we should see over here, okay? But once again, do we have the low in place here, and how would we go about that? Well, I think that the price point here, the $17, as a nice solid tested support here, would give us a trade set up to trade long, and would also look to scale in on top of group 1, which would be 1730 area through here. So you can see that, it does appear that we've got like a little 5-wave structure here. So that's why I'm sort of keen to sort of call this in as the low here. But once again, one of the other things here is that we've got 5 waves here. We'll get a counter trend here, and we'll get another 5 here. That's as much as we can predict. But what we do want to see after that is a wave 4 here, and then a wave 5 here. That will help us out. That will give us that larger 5 waves here. Will give us another larger 5 waves over here. Take us up much higher into the 19 sort of area through there. So first of all, we just need to have a really nice support here. So an A, B, C across the $17 mark here, pulling back to this little consolidation here, and then finding support here would be the first position. And you can scale in on 10, 20, and 30 here, but support on top of 30 would set the target at 1750 there. So that's what we're looking at there. So what I can see here, what I was trying to say at the beginning here, is that the grains and these soft commodities, basically, they can have possible lows into place, and we're just looking at it. We're looking for them. They're developing now. They're not beautiful pictures. They're not clean structures at all. They're just little pop-ups. Probably, the US dollar contracts rolled over into September now. It's the US dollar contracts are still, this is the new September contract here, so there'll be a slight adjusting in price here, but we'll stay with the point that, if the 80.50 here becomes a retested resistance, then it would give the first step in weakness in the US dollar. So that would also, give us a basis for the soft commodities to move to the upside as well. So we'll just watch this for a little while. The orange juice market is on track. So we were looking for, basically wave 3 here and wave 4 here. So if I just come back into the chart that we're looking at here, we're looking for this wave 4 to come back into play, which is done basically with the move up through here. So now we're looking for support on 165. That's what we need here. Support on 165 here will see us at 168 and 170 up into this area here, our target area for our long trades. Anyway, a nice support on the 165 would also give you an opportunity to add to positions. So we can look to do that. But yeah, nice to see that wave 4 completed with this move up through here. And once again, this soft commodity is in line with that little short, sharp shot, you know, coming in to most of the other grain markets. Alrighty, well, that's it. Thanks for listening.